Let me ask you a genuine question, because how many times have you watched XRP push up towards $2, felt that little spark of excitement, and then bang, rejected again? Back to chopping, back to frustration, and back to people on Twitter saying XRP is dead again. And if you're holding XRP right now, this isn't just numbers on a chart, it's an emotional thing. Because Bitcoin runs, Ethereum runs, Solana runs, and XRP just seems to be a little bit stuck right now. So today I want to answer one simple question. Why does XRP keep hitting a wall around $2? And why does price action alone not explain what's actually happening? Because once you understand what's really going on behind the scenes, that frustration starts to turn into clarity. And clarity is how money is made in the market. So let's get into it.
I am not a financial advisor. This video is based solely on my opinion on what I'm personally doing in this market. I also want to let you know that some of the links below and in the descriptions are affiliate links, meaning I may get a commission, but it will be at no extra cost to you. Please remember that under no circumstances will I ever contact you and ask you for investments. You can confirm all of my real social media handles in the description and also at milkshakematty.com. This content is for educational and entertainment only, and I'm not a financial advisor.
Let's start with the obvious. Yes, $2 is a psychological level. Round numbers always are. It's the same for Bitcoin at 100,000 US dollars. That round number is easy line in the sand for people to draw in their mind. But this one behaves differently. We don't just get rejection, we get clean, precise, repeatable rejection. And that tells us something important. This isn't panic selling. This isn't retail taking profit. This is structural liquidity management. And here's where most technical analysis falls short. Because when you open a chart, you're only seeing trades executed on public exchanges, retail visible order flows, what wants to be seen. What you're not seeing is OTC transactions, dark liquidity pools, and internalized institutional flows, or wallet level coordination. So when someone says XRP can't break $2 because there's too many sellers, that's an incomplete answer. The better question is this. Who benefits from XRP not breaking $2 yet? Retail investors trade price. Large players trade liquidity. That difference matters more than anything. Retail looks at candles, indicators, support and resistance. But whales? They look where retail stops are placed, where emotion peaks, and where forced sellers will appear. And when price keeps rejecting the same level, something predictable starts to happen. People lose patience. They start to say things like, this thing isn't moving. I'll rotate to something else. I'll buy back when it's lower. That emotional churn is exactly what creates cheap liquidity. So when you see repeated failure at $2, understand this. That frustration is not accidental. It's the mechanism that's by design. Let's talk about whales. And I mean talk about them properly. Not hype, not conspiracy, just behavior. One of the most telling signs in XRP is dormant wallet activity. These are wallets that sit inactive for long periods. They suddenly move large amounts, then go quiet again for a long time. That pattern usually means strategic repositioning, not panic. Here's why whales often suppress price instead of letting it run. If price breaks $2 with momentum, retail FOMOs in, slippage increases, accumulation becomes more expensive. But if price is capped, retail sells boredom. Liquidity stays deep and accumulation stays cheap. This is why no news periods are often accumulation periods. Smart money doesn't buy excitement, it buys the boredom. So let's talk about something most people never look at properly. The order book. Large players can stack large sell walls. They can pull them at the last second. They can repost them higher or lower and create illusionary resistance. This does two things. It discourages buyers and it trains traders to short the same level. Then, when liquidity is perfect, those walls disappear. That's why breakouts often feel violent and sudden, because the resistance wasn't a real selling pressure. It was a liquidity control. Here's something most YouTubers won't say clear enough. A massive amount of XRP trading does not happen on public exchanges. It happens on OTC. Over-the-counter deals allow institutions to buy size without moving the market, without causing price spikes, without alerting retail. That means supply is being absorbed quietly, while prices look stuck to people like me and you. While sentiment turns negative, this is why price action alone can be misleading. The real story is often happening off exchange. Now, we can't talk about XRP without acknowledging Ripple. Ripple's escrow releases are known, scheduled, transparent, but how that supply is used really matters. Strategic sales into institutions, liquidity providers, and payment corridors don't always show up as bullish price action immediately, but they do strengthen the long-term infrastructure. This is one of the reasons XRP behaves differently to meme-driven assets. It's playing a longer game. Now let's address regulation, because periods of uncertainty, legal grey areas, or waiting for clarity, these are often the best environments for insiders. And why is that? Because retail hesitates, but institutions prepare. Arbitrage opportunities will expand. And by the time clarity arrives, positioning is already done. Retail gets confirmation, but the smart money already has the exposure. Now, let's talk psychology. This is one of my favorite subjects in crypto because it is so important. Every rejection at $2 creates fear, frustration, and capitulation. And every negative headline amplifies that feeling. Mainstream media or social media do not move markets, but it amplifies emotion that already exists. That's why bullish news at resistance often fails, and bearish news at support often marks bottoms. Markets move to hurt the most people they possibly can. Understanding that changes everything. So what do savvy investors do in situations like this? They stop obsessing over the 5-minute charts. They stop obsessing over daily noise or emotional reactions, and they start watching wallet flows, exchange inflows and outflows, and liquidity corridors. Time, not price. They build positions slowly, they average intelligently, and they wait for confirmation, not hope. But here's the key insight. When XRP does break $2 for real, it won't look like previous attempts. You'll see resistance removed, not fought, volume expand after the move, and pullbacks hold former resistance. And sentiment will flip violently to bullish momentum. And that is not random. That's the transition from accumulation to distribution. And this is actually why I created my free crypto liftoff course. Because if you're new or feeling stuck, it's not because you're stupid. It's because no one teaches you this stuff. Market structure, psychology, risk management, how cycles actually work. And inside the free course, I break down how I approach the markets. It's the exact frameworks I've used through multiple bear markets and multiple bull markets, without hype, without no paywalls, and without no nonsense. It's 100% free. You'll find the link in the description, or just head over to cryptowolfpack.co.uk and click on the free course. No cost, no pressure, just free education. So if XRP is frustrating you right now, remember this. Sideways doesn't mean weak. Quiet doesn't mean dead. And resistance doesn't mean failure. Sometimes it means preparation. If this video helped you see the market differently, drop a like, subscribe to the channel, and let me know in the comments. Do you think XRP breaks $2 soon, or are we still in the accumulation phase? Thank you for watching all the way to the end. I'll see you in the next one. And remember this, the strength of the wolf is in the pack.